Thanks very much. And joining me for today's Options Insight is Todd Horwitz. He's Chief Strategist at Bubba Trading, and he joins me from the CBOE in Chicago. Todd, good to see you. You know, markets, they're higher for a third day in a row, hitting session highs. Nearly record highs. At least we're on pace for that. But you're saying that greed and the Fed are pushing equities. Tell me about that. Talk to me about greed right now.
Great to be here, Ramey. You know, I think we're going to make new highs. I think I indicated that. But again, the overall build of the market is being built by weaker dollars, which are leading into more margin. So we've got more people buying stock that they can't afford, that they won't be able to pay for should the interest rate ever change. So as long as the Fed maintains this ridiculously low interest rate policy and refuses to step up to the plate and raise rates, we're going to have people flooding into the market, chasing yield, and eventually that greed will end. But right now, we've got a lot of people that are chasing with money that they don't really have because they have the availability of grabbing that cheap margin money, which is all part of the big scheme and the big picture. So we're not building fundamentally, we're building through dollars, and we all know that that usually ends up to be a house of cards, which will come tumbling down.
Yeah, you know, I love the show The House of Cards on Netflix, but I suppose that is not going to end well for President Frank Underwood. You think that's not going to end well for people who are trying to ride this high?
I don't think it's going to end well for anybody here. You know, at some point, we have to face the reality that the jobs, they can say what they want about jobs. We've not had good jobs. We have not had good growth. We have not had a real, true recovery. And that after $4 trillion being invested by the Federal Reserve into the system, this is where we are. I don't think the recovery's been all that great if you look at the money that's taken us to get here, and we're still at basically a zero interest rate policy.
All right, I want to pick your brain a little bit. What would cause this to collapse and when?
Oh, I don't think it'll be anytime soon. I think what will really happen is the greed will start to wear off, the money will stop flowing in, and then there may be some event that will start some selling. But usually what we've seen over the past few years, the selling gets bought up right away. We saw it on February 11th. But the next, one of these times, the buyers will not be able to step back into the market. And that can have to do with a higher interest rate policy initially. But it will probably be some event that will create some fear in investors and the ability for the fixed income people who can't stand being in the equity markets right now, giving them an opportunity to get somewhere else. If they can get a little higher interest rate, they would love to pull their money out today.
All right, you are looking at Smith & Wesson, the handgun maker, of course. It's up about 1% today. Year to date, it's down by about 0.8%. But you say that there's some stuff already factored in. With that said, just yesterday or the day before, I was talking about how background checks are down year on year for the month of May, as well as month on month. You think that's all priced in? You think it'll be okay?
Yeah, I think it's priced in pretty well here, Ramey. I think when you look at a chart and you look at the overall mechanics of the market, they've already sold off this stock pretty good, especially over about the last 2 or 3 weeks. Bring it down to, I think the low is around 21 or just under 20. But, you know, I look at it, we've got earnings coming out next week. I don't believe that the earnings can be worse than they're already expecting. And that's one of the things you got to understand as an investor and as a trader is market expectation. So they've already priced in a lot of this information to the stock. So I believe that it's great to be able to buy the stock down here. I think that gun sales will improve. I think that their market is going to be better. And I think that what you're going to see is that they've already priced in a very bad earnings number. And we should see probably a pretty good pop in this stock. So I want to do some sort of a ratio spread here that allows me to be in. I'm long the stock. Basically, I'm doing a 2-by-3 ratio, selling the 22 call, buying 3 of the 23s. I can do that for a 25-cent credit. So what happens is if I'm wrong and the stock goes straight down, I get to keep the 25 bucks. Right. If I'm right and the stock goes up, I can make unlimited gains.
Super. Todd Horwitz, we're going to have to leave it there. Thank you very much for your thoughts on Smith & Wesson. And still ahead...